Hey, hello, my wonderful people. Today, and it's another day, and I just thought I should give you a quick. I've received various inbox messages from those from my Telegram channel, and somehow maybe they are having a challenge with the strategy that I've given. Let me just still add another free strategy, and it is very powerful if you know how to do it. And basically, this is just price action, okay? So, we are going to only use two indicators. No complications whatsoever, okay? And with these two indicators, it's just using now the resistance points and see how the market will react, okay? So here we go. This is in the indicator window. We only have the relative strength index, and that is value 21 applied to close, and the levels is 90, 50, 75, 25, 10, but we are not using the level so much, okay? We're just using the peak points. Done. That's it. So it's just the RSI, and that is it. Just two indicators. Well, the Bollinger Band on the main indicator window is also used, but not really basically for this tutorial. Okay, so let's go. So we are going to be drawing straight lines. Every place you will see that a spike happened, you only draw a straight line, just like that. How do you know the third spike will come? The first you connect the peak and the peak, and then when you lengthen it, the time the market will reach this point, it must spike, you see, and it spiked immediately after that. So you are using the peaks of the RSI, okay? You are using the peaks of the RSI as reversal points, okay? And if you would take it this far, do you see it still touches up to it touched? So these first 2 points, was to give you the peak of where you will place your reversal. So you could have gotten this spike, which was a major one, this and this, and then you would have gotten this other one, which was now this, and then you would have gotten the third one, which was this, and it was a double spike again, okay? So when best does this strategy work? It works in areas where the trend was not very strong. It had been on a downtrend, but for some time the trend was not so strong. In this sense, how do you know the trend was not so strong? I'm seeing my moving average 200 within my window, okay? Anytime you're seeing moving average 200 within your window, what I mean is this golden moving average is EMA 200. So anytime within your window you're seeing the moving average 200, know that it had not been on a very strong downtrend. So within that time, and then the spike happens and it gives you two peaks, know that the third time when the moving average, when the RSI will reach that point, it must spike, okay? So we got a few spikes on that, and you can use this in a very fast way to grow your account, because it is like a scalping strategy, but still at the same time, even if you were to place this, let me reduce my arrow. If you were to place this here, when the market reached that point and you placed and it didn't spike, you are only to go into a negative of approximately 2 to 3 candles. When you see there's no spike that is coming, you can close. So you can always monitor how much you want to lose in your account, okay? So it's a win-win situation. If you go into the market, At most you can go like maximum of 4 candles. If the spike does not come, you can close. Same here, you place your trade after 4 candles. If the spike does not come, you close your trade. Same to this, and you see all the 3 points here, they all yielded. Yeah, so it can be a very quick method to gain very fast within your account. Okay, can you see this again? So this was not how do you identify when the market, after it's given you like the first peak point, how do you identify that it will go higher and higher? Check here. So this one was at the lower of the Bollinger Band here, and it went to the middle of the Bollinger Band, came down to the lower of the Bollinger Band. Now at that time it was this, our second peak, to give us the second peak, and then it went to the top of the Bollinger Band. So anytime it's gone to the top of the Bollinger Band, it's moved, because the lower part of the Bollinger Band is seller's area, the upper part of the Bollinger Band is buyer's area. So it had officially shifted from seller's area to the buyer's area. So at this time, when the market was coming down, it was like we are officially in a small resistance, but we are in a buyer's zone. Do you understand? And at this time, the market had already tested the upper Bollinger Band that acted as resistance in this place. But yes, you will only know that the market is going up if it has broken the middle Bollinger Band. Okay, so the first spike, when a trend has always been established, the first spike, you check all your trades. The first spike always reaches to the middle of the Bollinger Band, comes down to the lower of the Bollinger Band, goes all the way to the top of the Bollinger Band, and then comes and retests like the middle of the Bollinger Band. So at that time, if you are wise enough, you place your trade now according to this resistance on the peaks of the RSI. You see? And immediately it reached here, it went again, middle of the Bollinger Band, it went, and even the third one here, it was the middle of the Bollinger Band, and it went. So you see, the resistance here, it can be on both places. It can be the middle of the Bollinger Band, and still it can be the peaks of the RSI points. Okay, I think you've understood that. So same case, how are you to know that? Let me bring this arrow. I want to bring it back. The arrow, I need the arrow. How are you to know that these 2 peaks here was not going to act? Because the first spike after the long trend, the first spike hit all the way to the top of the Bollinger Band. I want to bring this arrow. This here. So it spiked after a long trend, it spiked from the bottom, went all the way to the top, and then it reversed a bit, and it didn't even touch the middle of the Bollinger Band. And then it went again. So at this time, it had really exhausted like the small room that it had. So it had to reset itself again, come all the way down, and then now find its place now of, start spiking in a proper way. So if you are keen enough and you are able to identify this kind of trends, every time it breaks free from this kind of long trend, the first spike, if it doesn't reach the middle of the Bollinger Band, if it doesn't reach here, but it has spiked all the way, you should not have hopes immediately that another spike will come. So within this area, don't place your trade, please. This just came as, just by the way. But the thing is, it will never spike twice, especially if it has spiked to the top of the Bollinger Band. Okay, so most of the time, it will spike to the middle. If it spikes to the middle, then know that we still have room to play around. But if it spikes all the way to the top and then it starts reversing, know that it will have to reset itself up to this level again, so that it now starts spiking in a proper way that it usually spikes. Okay, so you will know that the trend will continue spiking if it spikes to the middle, come back to the bottom, retest your bottom, spike to the top, and then now at that time we are now officially in a buyer's area, and then it will come to the middle of the Bollinger, and then the spikes will go up. That is how an uptrend sets itself. An uptrend sets itself in, it does not just spike once since we've reached an overbought level. How are we in an overbought level? You see this RSI 21 touched level 10. Okay, so I specifically don't use RSIs to place trade on the extremes of level 10 and 90. Why? RSI does not work all the time. You may find sometimes it touched level 90 and then you placed your trade and it does not spike. So I don't use RSI to trade level 90 and level 10. You can even go sometimes move from level 90 and it goes all the way to level 100, or sometimes it can be very crazy straining in the market. So I tend to play around during these moments when I use support and resistance during this ranging market. So I don't go for the extremes, I try to catch a spike when it's reached an extremely overbought level. Okay, when you really want to catch sweet spikes, this is the kind of setup here. When specifically your RSI is not on the extreme. Okay, so you see this point here, so we are above level 25, almost level 30, which is now the normal buyer's area. Okay, so these are always the good places where you can get proper spikes. Okay, so point to note, it's a very simple strategy today. Point to note is, let your RSI at that specific time be within these areas, not at the extreme of level 10 or level 90. So let it be within these areas. Okay, so when it is within the ranging market areas, just place your indicator on the peaks of the RSI, and from there, after the first spike has come and the second spike has come, and within the main window, we are now going to range mostly on the upper part of the Bollinger Band, then know that you're officially in an uptrend. Okay, so that is when the spikes will come. So the spikes come when we are on the upper part of the Bollinger Band. We've moved from the seller's area into the buyer's area, and it also applies likewise for the crashes. So it has to move from the upper part of the Bollinger Band to the lower part of the Bollinger Band. Okay, so it's as simple as that. Don't complicate. Let's look for another setup. Do you see this? This was supposed also to have given you another sweet setup. I need to get an arrow. So this was, but well, I wouldn't have really taken this because it went so fast. Yeah, it went, though the first spike came around our area, because if you are to place that, you would have placed there, so you would have been on a deficit of a few minutes. That is where it crossed, and of course at that time it was 3 minutes into the Bollinger Band. I'm talking about on top here, 3 minutes into the Bollinger Band. But again, it would have put you a few candles negative and then it spiked. Okay, but I wouldn't really have placed, as long as it's not touched the middle of the Bollinger Band and it's not showing me a proper setup. I would not, because at this point I had not gotten the proper peaks I can't really take this as a pick. So if I was to put another pick, it was that. Okay. So unfortunately, I would not have placed after that second pick. Why? A pick that spikes at level 50 of the RSI is always like the last spike. Just check your charts again, and especially if it wants to spike consecutive spikes, it will go in series of 3. So anytime you will find the first spike has come, the second spike has come, the third spike has come, and we are already on top of the Bollinger Band, and it's like it doesn't have room to go up. Any 3 spikes, it has to reset itself. Any 3 spikes, it has to reset itself. And then now for a proper long uptrend, it will go 6 spikes. Check that. Okay, it's a tip I'm giving you. So the first spike will come, the second spike, the third spike. So if it is a 4th spike, it is always 50-50. So don't place that. Don't place that, okay? So I will always place, if this pick here was a nice one like here, and it is the second pick, I would have placed. Unfortunately, it was the third pick, and it was above 50. So the third spike, getting a 4th one is always a bit tricky. And you can follow. You see, like even here, it is 3 spikes, it resets itself. See here, 3 spikes, it resets itself. See here. So this is a bit different. See here, 1, 2, and 3 in concession. So every time you get 3 spikes, it means the market has like finished its strength to spike anymore. So it will have to reset itself before it starts spiking again. So anytime you get 3 spikes, rest. 3 spikes, rest. Okay. So sorry for that. Now my last bit is check here. I want to bring that was another nice tab. And also something else that you should be able to give you a highlight. Check here. So on top we are having a divergence. What is happening on top and what is happening at the bottom is refusing to tally. So you will always know that another spike will come at this point. Why? We were now in the middle of the RSI was in the middle of between 25 and 50 officially, and on top here we had also moved from, you know, this level. Okay, here the lower part here acted as a resistance, and even if you were not so sure that a spike will happen, and then it came the second time, this middle Bollinger Band was supposed to have shown you that, you know, so with your line here, with your line very exact down here, you would have known that it is a continuation, okay, and go the other 2 spikes up. But for me, because I know how these things work, I would have gotten from this third spike. So I would just place my line there and go with the trend, finish that strength of the spike, and then wait for it to reset again. So that's it for today, and happy trading as usual. God bless you, and in case of any questions, you are free to inbox me. And thank you for those who've gotten in touch who are already getting into the VIP. From tomorrow, I will now be featuring on part of what I have in my package for training. Okay, because I told you I have a training for the VIP. So I will be featuring the product so that by the time somebody wants to enroll for the VIP, they know what they are getting into. And the VIP only costs $100. And, you know, go into the market, make money. So that's it. God bless you. Shalom.